If your money has been sitting in a saving accounts these past few years, you have quietly lost almost 25% of your buying power. Today I'll show you why Houston real estate is one of the strongest ways to reverse that trend, backed by real data, real demand, and real investor outcomes. Hey everyone, I'm Shahid Pirani with HomeSmart. Over the past 5 years, inflation has eaten away nearly a quarter of the value of every dollar sitting idle. Saving accounts earn 3 to 4%, while consumer prices rose almost 25%. If you had $100,000 sitting in your bank account back in 2020, it buys only $75,000 worth of value today. And most people lost purchasing power simply because they did not take any action. So how do you fight back? You move your capital into an asset that doesn't sit idle. It earns, it grows, and it compounds even while you sleep. Real assets rise with inflation, not against it. That's why today we are focusing on a rental income property, one of the few investment vehicles that can hedge inflation, generate dependable monthly cash flow, and build long-term equity when purchased and managed the right way. A well-positioned rental property earns today through cash flow, grows tomorrow through appreciation, and multiplies through leverage. And right now, Houston is one of the most strategically advantaged markets in the entire country for this particular strategy. This isn't theory, it's data, it's demographics, job creation, and economic fundamentals working together to build inflation-resistant wealth. Texas gained more than 1 million new residents in past 5 years. Houston continues to expand through job growth, healthcare development, population inflow, and Fortune 500 relocations. Millions of visitors and professionals come to Houston each year for medical care, business, education, and lifestyle. And all of them need short-term and medium-term housing. This constant demand creates a rental environment that is both stable and profitable. Today we are examining the 5 investment hotspots that consistently outperform the rest of the city: Texas Medical Center, Montrose, Midtown, Downtown, and Energy Corridor. These are Houston's most reliable, most proven, and most data-supported income neighborhoods. In future episodes, I will take you directly to each of these zones, walking the streets, showing the real properties, and breaking down why these areas perform year after year. Let's begin. Texas Medical Center, Houston's engine of non-stop demand. The Texas Medical Center isn't just a medical district, it is one of the most powerful economic ecosystems in the world, generating over $25 billion in annual economic impact. Every year, more than 10 million patient encounters take place here, supported by over 100,000 medical professionals, researchers, caregivers, and staff. Demand here never stops. Within a 10-minute radius of the TMC, occupancy remains among the highest in Houston. Daily arrivals create continuous short-term and mid-term and long-term housing needs. In an upcoming episode, I will also bring a certified ADA-compliant consultant with more than 10 years of experience to walk you through the do's and don'ts of investing in ADA-compliant opportunities. Whether it's clinics or pharmacies or hospitals or assisted living projects. I will also interview an investor entrepreneur who built and flipped a 13-property short-term rental portfolio in Medical Center, and a multi-family operator who owns and manages an entire apartment complex. Number 2 is Montrose, premium lifestyle and high ADR zone. Just minutes northwest lies Montrose, artistic, walkable, high demand and highly profitable. Montrose attracts corporate travels, medical professionals and international and creative visitors. Its proximity to the museum district in the Red Line rail system allows furnished units to deliver premium nightly rates and strong midterm bookings. Third is Midtown, balanced, transit-driven, always booked. Midtown connects downtown and the TMC. Young professionals love its restaurant and walkability. Medical staff rely on the 5-minute rail ride into the medical center. This blend of weekday business and the weekend leisure typically maintains around 75% occupancy round the year, a textbook cash flow performer. Fourth is downtown, event-driven profitability. Downtown Houston is the business center, entertainment hub, and event capital of the city. Conventions, conferences, concerts, and major sports events. It pushes nightly rates 20 to 30% above city averages. Investors who understand timing and data-driven pricing see strong upside here. Number 5 is the energy corridor, corporate stability and long-term strength. The energy corridor is home to global engineering firms, energy companies and consultants on 60 to 120 days assignments, creating dependable midterm lease demand. With median home value around $490K and improving transit access, the energy corridor remains a low volatility, high consistency market. Being a successful realtor today requires more than finding properties. It requires digital system that makes properties perform. That's why we partnered with techdevelopers.io to deliver strategic digital marketing, listing optimization, targeted tenant and guest acquisition, tech-managed maintenance coordination, live dashboards, and real-time reporting. You stay in control. All renter incomes goes directly to your account. We never touch your money. Simple, transparent service fee. No hidden charges. You remain the owner. We provide the digital infrastructure. Inflation punishes savers, but rewards those who own productive, income-generating real assets. Houston's 5 zones advantage, TMC, Montrose, Midtown, downtown, and the energy corridor is designed to outpace inflation, build equity, and produce income even while you sleep. If you'd like to explore these opportunities to fit your goals, click the link below and stay connected. I'm Shahid Pirani with HomeSmart. We turn data into real wealth for real people. Thank you.